Since early September, global financial markets have been displaying strong turbulence. After the thin market on Labor Day yesterday, the economic calendar reminds traders about an abundance of data on the U.S. labor market later this week. The nonfarm payrolls will be crucial for the U.S. Central Bank when choosing an option for cutting the funds rate at the meeting on September 18. All in all, markets expect the Fed Reserve to cut interest rates by an over 100 basis points at the three policy meetings left until the year end. At the same time, many analysts still believe that the Fed Reserve will ease its monetary policy more rapidly in the coming quarters than the G10 regulators. Curiously, the US dollar bulls prefer not to look that far ahead. Indeed, the US dollar index, which measures the greenback's strength against 6 major currencies, is still recovering today from the low of August. The US dollar index slumped by 2.2% in August due to the expectations of a rate cut in the US. On the first trading day of September, the index touched a two-week high of 101.79. Today, it's a trading higher within an intraday corridor of 101.60 to 101.80 points. Where does the greenback get such agility? Of course, every currency relies first and foremost on a strong economy. Historically, a batch of data on the labor market is released on the first week of each month in the United States. The first report in this series will only be available tomorrow. And today, the most important indicator will be the US manufacturing PMI. Business activity in the manufacturing sector is expected to gather pace last month. The ISM PMI is projected to rise to 47.5 in August. However, overall, it's still in a negative territory that's below the 50 level. So, when analyzing the indicator, you need to keep in mind its two opposite effects on the US dollar and through it on the other assets. If the index comes out below forecast, this is an argument for the Fed Reserve in favor of a sharper rate cut. In turn, it's a signal for the dollar to lose ground. If the PMI comes out at 47.5 points and is even stronger than expected, the US dollar will assert its strength. Thus, the demand for risky assets will go down. This market low worked out for the euro in the first half of the day. The single currency was trading close to the two-week low of 1.1042 reached in the previous session versus the US dollar. However, the euro is not going to give up. Indeed, the euro-dollar pair is still sticking to the upper border of the psychological area of 1.10 below to 1.1050. And this indicates an ongoing downward correction from the local high of the medium-term trend. To extend the decline, the peers need to hold the instrument below 1.1050. However, this will only lead to a local shift to the lower border of the above-set psychological area. Nevertheless, this will in no way cancel the overall bullish trend in the euro-dollar pair. Our analysts admit that yesterday's stagnation in the market may continue today, especially during the European trading session. At the same time, amid the empty economic calendar, the euro may react to comments from the policymakers of the European Central Bank. Today, the head of the ECB Supervisory Board, Claudia Buch, and her colleague Kirsten Yotnik will make statements at 8 Eastern Time and 10 Eastern Time, respectively. The fact is that inflation in the EU is slowing down much faster than in the United States, so the European regulator may hint at a slightly more active easing of monetary policy. In turn, this could be bullish for the US dollar. However, such a development is unlikely since regulators do not make decisions based on the economic data alone. They are more interested in the dynamics over time, and the recent decline in inflation in Europe may be temporary. The US economic data due out this week could also trigger Bitcoin's growth, and the leading cryptocurrency tumbled by more than 10% in the last 7 days over August alone. So the first week of September, which is low loaded with the US labor market data will provide clues not only for the US dollar but also for Bitcoin. In the meantime, the flagship crypto is hovering around the important resistance of $60,000, consolidating in an intraday corridor of $58,718 to $59,765 ahead of the economic data from the US. Oil prices are also fluctuating between minor gains and losses today. Currently, traders are assessing the planned increase in oil output rates from OPEC and its allies next month, economic problems in China and production cuts, and in Libya. The Brent price has already climbed above $77 per barrel. Apparently, this rise will continue. In the short term, unless something extraordinary happens, oil prices should rise to $78 per barrel. If we follow the patterns of a previous rebounds, Brent crude may well return to the level of 80. However, if the downward cycle continues, the price may break through the support area of $75 to $75.50 per barrel. The Russian ruble has gained ground again, and the dollar-ruble pair slipped to 90 and even went slightly lower. However, the instrument remains in the range from 90 to 92 rubles per dollar. Logically, the market should now move towards the upper border of the range, which is the most realistic scenario. Moreover, there are no special reasons for the ruble to grow. After all, the Russian manufacturing PMI fell from 53.6 points to 52.10, while analysts had projected it to fall to 53.10 points. The ruble is strengthening due to the domestic robust economy. So how will going to be in the short term in financial markets? We will definitely tell you in our next news releases. Subscribe to our channel and follow news with us. And see you soon.